What is happening, crypto champions? Get ready, because the news cycle is absolutely electric, and we've got the inside scoop on what's moving the markets right now. The pace of change is relentless, and if you blink, you'll miss it. We're talking about massive shifts, behind-the-scenes moves, and projections that could redefine everything you thought you knew. This isn't just another update. This is your essential briefing to stay ahead of the curve. We've got a deep dive into how global financial currents are directly impacting your favorite digital assets. Prepare to be amazed. But that's not all. We're also breaking down the strategic moves by major players that are turning heads, giving you the critical context you need to understand their impact. These are the decisions that ripple through the entire ecosystem, and we've got the details. And the insights keep coming. We're exploring the intricate patterns and projections that could shape the next big wave, offering a glimpse into what the future might hold. It's complex, it's fascinating, and it's crucial for anyone looking to navigate these dynamic markets. Finally, we're dissecting the big picture strategies from industry titans that are making waves. These are the moves that could define market leadership for years to come. Stick around, because you absolutely do not want to miss what's coming next. Make sure you're subscribed and have that notification bell on. Global money printing fuels Bitcoin's next SIR. Get ready for a massive financial story. The world's money supply just hit a staggering $112 trillion, with the US alone accounting for over $22 trillion. This isn't just a number. It's a massive influx of liquidity that has historically been a rocket fuel for Bitcoin. We're seeing global central banks, from the US to China, injecting vast sums into economies, a trend that has directly correlated with Bitcoin's price performance in the past. Think of it as a tide that lifts all boats, and Bitcoin, as a forward-looking asset, often rides this wave even before it fully crests. Recent data shows that Bitcoin's price movements have historically lagged behind these liquidity peaks by about 60 to 70 days. This means that even though we've seen significant money printing, the full impact on Bitcoin's price might still be unfolding. Analysts are watching this closely, noting that Bitcoin has mirrored the performance of traditional assets like gold and the S&P 500 during these expansionary periods, even while maintaining its characteristic volatility. As of September 2025, Bitcoin is trading around $109,000, a strong position that reflects the current economic climate. The big question on everyone's mind is whether this trend will continue. Analysts are forecasting a solid chance, around 37%, that Bitcoin could reach $150,000 by the end of the year, provided inflation remains stable and interest rates don't skyrocket. This intricate dance between global liquidity, inflation, interest rates, and regulatory developments creates a dynamic environment. The story also highlights how Bitcoin's global appeal is growing, with increasing interest from regions like the Middle East and South America, further embedding it into the international financial landscape. However, it's crucial to remember Bitcoin's inherent volatility. While the historical correlation with M2 money supply suggests a bullish outlook, external factors like regulatory changes and unexpected macroeconomic shifts can always introduce uncertainty. Investors are advised to approach this with a balanced perspective, considering both the potential upside driven by liquidity and the inherent risks. It's a complex interplay of forces, and understanding this connection is key to navigating the cryptocurrency markets in 2025. But what does this mean for the immediate future? Stay tuned as we break down the latest Elliott Wave patterns for Bitcoin. Bitcoin follows the money as global liquidity surges. Get ready to connect the dots between global finance and your favorite digital currency. We're diving deep into the unprecedented surge in global M2 money supply, which has now reached a staggering $112 trillion. This massive expansion, fueled by liquidity injections from major economies like the US, China, and Europe, is sending shockwaves through the financial world and raising critical questions about where Bitcoin's price is headed. Historically, Bitcoin has acted as a leading indicator for these monetary trends, often seeing significant rallies 60 to 90 days before liquidity peaks are even reached. This suggests that the current wave of money printing could be setting the stage for another major upward movement. We've seen this pattern play out before. For instance, the $7 trillion added to the global M2 supply since January 2025 has coincided with Bitcoin's dramatic journey from over $100,000 down to $80,000, and then its subsequent recovery. Analysts are pointing out that Bitcoin, currently trading around $109,175, might be lagging slightly behind the most recent M2 growth figures, a gap that could signal an impending rally. This ongoing liquidity expansion continues to act as a powerful tailwind for risk assets, and Bitcoin is no exception. The correlation isn't just with abstract financial metrics. Bitcoin's price movements are increasingly mirroring those of traditional giants like the S&P 500 index and gold. This highlights Bitcoin's growing integration into the global financial system, demonstrating that its performance is influenced by the same macroeconomic factors that drive established markets. As central banks continue their expansionary policies, the relationship between global M2 and Bitcoin's trajectory is becoming even more critical to understand. The data suggests that while Bitcoin has experienced its own volatility, the underlying trend of increasing liquidity provides a strong foundation for potential future gains. It's a fascinating interplay of macroeconomics and digital asset performance, offering a clear picture of how global financial policies are directly impacting the crypto space. Understanding this connection is paramount for anyone looking to stay ahead in the evolving world of cryptocurrency. But how do the technical indicators align with these macroeconomic trends? Let's dive into the latest Elliott Wave analysis. Elliott Wave Update: Decoding Bitcoin's September 3rd Trajectory. Prepare for a crucial technical analysis that could unlock Bitcoin's next move. We're diving into the intricate world of Elliott Wave theory, specifically focusing on the patterns emerging for Bitcoin as of September 3rd, 2025. This analytical framework, beloved by traders for its ability to predict market psychology and price movements, suggests that we might be on the cusp of significant shifts. Elliott Wave theory posits that market prices move in predictable wave patterns, driven by investor sentiment. These patterns consist of 5 waves in the direction of the trend, followed by 3 corrective waves. Understanding where Bitcoin sits within this cycle is key to anticipating its short to medium-term direction. Analysts are meticulously charting these waves, looking for confirmation signals that indicate whether Bitcoin is completing a corrective phase and preparing for a new impulse wave, or if it's entering a deeper correction. Factors such as volume, price action, and divergence across different timeframes are being scrutinized. For instance, if Bitcoin has completed a 5-wave uptrend and is now in a corrective phase, ABC, the next move could be a significant bounce. Conversely, if it's still carving out the final waves of an impulse, further upside might be expected before a larger correction. The specific patterns observed on September 3rd are crucial. Are we seeing the completion of a complex WXY correction or the start of a bullish impulse wave 1? The implications for traders and investors are substantial, as identifying these wave counts accurately can lead to more informed entry and exit strategies. The current market conditions, characterized by high liquidity and mixed macroeconomic signals, add another layer of complexity to the analysis. It's not just about the waves themselves, but how they interact with the broader financial environment. Experts are closely monitoring key resistance and support levels that align with projected wave targets. Any breakthrough or failure at these levels will provide vital clues about the validity of the current Elliott Wave count. This detailed technical outlook offers a unique perspective, moving beyond simple price action to decipher the underlying market dynamics that could drive Bitcoin's valuation in the coming weeks and months. It's a must-watch for anyone seeking a deeper understanding of market mechanics. Now that we've covered the technical side, let's shift gears to the strategic moves of major industry players. Get ready for a deep dive into MicroStrategy's Bitcoin strategy. MicroStrategy's Bitcoin strategy: high-conviction play amid volatility. Is MicroStrategy's massive bet on Bitcoin still paying off, or is it time to reassess? We're dissecting one of the most talked-about corporate Bitcoin accumulation strategies in the industry. MicroStrategy, under the leadership of Michael Saylor, has become synonymous with aggressive Bitcoin acquisition, transforming itself into a quasi-Bitcoin ETF for many investors. Their strategy has been built on the conviction that Bitcoin is a superior store of value and a hedge against inflation, far outweighing traditional corporate treasury assets. However, the recent market volatility and a noticeable compression in its valuation have led many to question if this high-conviction approach is still sustainable. The company has consistently used its capital, including debt financing and equity offerings, to purchase Bitcoin, amassing a significant treasury. This has not only influenced its own stock price, which often moves in tandem with Bitcoin's, but has also inspired other corporations to consider similar strategies. The core of their argument rests on Bitcoin's digital scarcity and its potential for long-term appreciation, which they believe justifies taking on leverage and enduring short-term price swings. Yet, as Bitcoin experiences significant price fluctuations, MicroStrategy's balance sheet bears the brunt of these movements, leading to substantial unrealized gains and losses. This volatility raises concerns about the company's ability to manage its debt obligations and maintain investor confidence, especially during prolonged downturns. Analysts are divided. Some argue that MicroStrategy's long-term vision and unwavering commitment to Bitcoin remain a powerful indicator of its future potential, viewing the current valuation compression as a temporary setback. They point to the increasing adoption of Bitcoin by institutional investors and its growing role in the global financial system as validation of the strategy. Others, however, express caution, suggesting that the company might be overexposed to a single, highly volatile asset. They highlight the risks associated with leverage and the potential for regulatory changes that could impact Bitcoin's price and accessibility. The question remains: is MicroStrategy's aggressive accumulation a masterstroke positioning them for future dominance, or a high-stakes gamble in a volatile market? The company's continued purchases, even amidst market fluctuations, suggest a deep-seated belief in Bitcoin's long-term value proposition. However, the market's reaction and the ongoing valuation compression indicate that investors are closely watching, waiting to see if this conviction will ultimately lead to sustained success or significant challenges. And that wraps up our deep dive into the major market movers. But before you go, let's hit you with a quick recap of all the top stories today. And that's a wrap on today's essential updates. We've seen how global money printing is potentially fueling Bitcoin's next major rally, analyzed Bitcoin's leading role in response to $112 trillion in global liquidity, decoded the latest Elliott Wave patterns for Bitcoin, and explored MicroStrategy's high-conviction Bitcoin strategy amidst market volatility. Don't miss out on future insights. Hit that like button, subscribe to Bitcoin Bulletin, ring that notification bell, and follow us on all social media platforms to stay plugged in. We'll see you in the next one.